Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. If you're short Tesla stock. So anyway, in a surprising turn of events that nobody could possibly have seen coming, Tesla has absolutely crushed it and destroyed everyone's expectations in their Q3 earnings. So in this video, I'll run through some highlights from Tesla's incredible, record-breaking, record-destroying Q3 earnings. So let's get into it. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. Okay, let's run through the highlights from Tesla's Q3 2021 earnings report. If you'd like to follow along at home, there is a link in the description to the PDF. Let's get into it. Here we are looking at the Q3 update from Tesla. So let's look through some quick highlights here. Operating cash flow, less capital expenditure, aka free cash flow of $1.3 billion in Q3. Net debt and finance lease repayments of $1.5 billion in Q3. In other words, Tesla paid down a mere $1.5 billion of debt because they have too much cash, and why not? Profitability, $2 billion GAAP operating income. A 14.6% operating margin in Q3. This is enormous, a 14.6% operating margin. And incredibly, despite the headwinds, supply chain issues, logistical problems, etc., lots of things working against Tesla, they still managed to achieve a 30.5% GAAP automotive gross margin, a 28.8% GAAP automotive margin, excluding regulatory credits. This is enormous. Now, for those of you who've been around on the channel a while, you'll have heard me say, for about 2 years in a row, Tesla's margins are marching steadily towards 30%. Well, we're almost there. This is incredible, and I don't think it ends here. I expect over the long term, these may grow to as much as 40%, so stay tuned. Quote, "We achieved our best ever net income, operating profit, and gross profit, 3 huge records. Additionally, we reached an operating margin of 14.6%, exceeding our medium-term guidance of operating margin in the low teens." So despite the headwinds working against Tesla, increased costs of certain parts, massive logistical problems and supply chain challenges, they still achieved their medium-term goal of operating margin. This is incredible execution, and Tesla really deserves a round of applause. Our operating margin reached an all-time high as we continue to reduce cost at a higher rate than declines in average selling price. For those of you who are unsure what Tesla are talking about here, the price for customers to buy Tesla's vehicles continues to trend down and decline over time. Yet Tesla is making more money on every vehicle sold. Think about that. Quote, "We believe the more vehicles we have on the road, the more Tesla owners are able to spread the word about the benefits of EVs. AKA, the more Teslas Tesla sells, the more Teslas Tesla sells." Another phrase I've been repeating since day one on this channel. They have a great point. They're right. Every Tesla on road is basically like a salesman or a saleswoman for more Tesla vehicles to be sold. People ranting and raving, taking their friends for test drives, etc., extolling the benefits of owning an EV, the lower cost of operation, etc. So, some highlights from the financial summary here. Q3 2021, this 30.5% automotive gross margin. Ridiculous. We've seen about a 10% increase year over year from 27.7% up to 30.5%. Amazing. Operating margin, this is just truly ridiculous. I mean, look at this. A year ago, we're at 9.2% and now 14.6%. Absolutely incredible. Look at the year over year increase in income from operations. 148% year over year increase. 809 million in Q3 2020, 2 billion in Q3 2021. And earnings per share at $1.86. Again, look at the increase here, 145% year over year. It's incredible progress in just 12 months. Total revenue grew 57% year over year in Q3 again. This is just incredible. And in terms of Tesla's cash position, quarter-end cash and cash equivalents decreased to a mere $16.1 billion in Q3. This is due mainly to Tesla paying down some debt. Quote, our total debt, excluding vehicle and energy product financing, has fallen to just $2.1 billion at the end of Q3. Compare that to about $16 billion of cash and cash equivalents. In other words, Tesla's in a very, very sound position financially. Just a few more highlights here. Year-over-year growth in vehicle production, 64%. Remember, Tesla aiming for a compound annual rate of growth in vehicle production of 50% or more, maintained for a multi-year period of time. Tesla well in excess of that in 2021. Another very impressive highlight here. Tesla saw increases in storage deployments of 71% year over year. This is a faster rate of growth than their automotive business. Remember, over the long term, Elon Musk and Tesla have been very adamant that they believe the energy business could grow to be at least the same size as the automotive business, if not larger. And we learned a really interesting clue from Tesla here. Quote, our Fremont factory produced over 430,000 vehicles in the last 4 quarters, and we believe there is room for continued improvement. Some more information was provided on the earnings call, which Elon Musk had also stated on Tesla's annual meeting. They believe that they can increase this capacity by about 50%. Do the math on that. Insanity. One of my favorite graphics from the entire report here, market share of Tesla vehicles by region. This is in the trailing 12-month format. And we see 3 exponential growth curves here, US and Canada, Europe and China, all following a similar trajectory. Anyone want to guess what this will look like in, say, 2025 and 2030? And regarding Tesla's battery cells, unveiled at Battery Invest today about a year or so ago, the 4680 in-house cell project continues to progress. We are producing an increasing number of battery packs for testing purposes, and so far, the test results meet our current expectations, aka smooth sailing. Things are progressing as expected so far. And as we talked a moment ago about Tesla's energy storage deployments, again, energy storage deployments increased by 71% year over year in Q3, mainly driven by strong megapack deployments. We can see here that Tesla's energy storage deployments are growing at a compound annual rate of 96% over the last 4 years. And check this out. This is the amount of megapack capacity being built currently. Just look at that. We are going to see explosive growth in Tesla battery storage deployments once this megapack factory is up and running. In terms of vehicle volume, quote, we plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle delivery. So Tesla once again maintaining this long-term goal. They've been stating this for years now. It is important that Tesla hasn't made any downward adjustments to this figure. Profit. We expect our operating margin will continue to grow over time, continuing to reach industry-leading levels. Now again, this is insane. They're already close to 15%, and they're expecting this to continue to increase over time. This is just mind-blowing. And finally, in terms of product, quote, we continue to target our first Model Y production builds in Berlin and Austin before the end of the year. Some great photos provided again. The Giga Berlin County Fair would have loved to attend, but unfortunately currently living under a fascist regime in Australia and not allowed to leave the country legally. Not even kidding. Gigafactory Texas office space looks pretty cool, very modern. You can see already Gigafactory Texas Model Y quality control already underway. Here's the monstrous exterior of the Gigafactory in Texas. Gigafactory in Shanghai with the R&D center in the foreground here. A bunch of gigapresses here in Shanghai. Let's count. 1, 2, 3, 4. Looks like 5 that I can count there. Maybe more hidden away, but I think that there's at least 5 there. And the most juicy part of the entire earnings report here, vehicle deliveries. Despite what Gordon the Class Clown Johnson would have you believe, there's a very clear trend in Tesla's vehicle deliveries. The same can be said with operating cash flow and free cash flow, a little bit lumpy quarter to quarter. Net income and adjusted EBITDA also trending in the right direction. But the real kicker, the trailing 12 months. This smooths out some of that lumpiness, the irregularities, and look at this trend. I mean, honestly, vehicle deliveries, smooth, beautiful exponential growth curve. Look what's happening with operating cash flow and free cash flow. And again, net income just a couple of years ago, just a few quarters ago, really negative, now growing quite strongly in the positive direction, and adjusted EBITDA climbing to the moon. So to sum up Tesla's Q3 earnings, they absolutely crushed it, blowing away even my expectations. Despite enormous headwinds, massive challenges with supply chain, global logistics, increasing material costs, Tesla's still managing to make more money on every single car sold while simultaneously building 2 new factories, blowing everyone's expectations away on Wall Street, even my own. And here's the kicker. Tesla's just getting started. Q4 is going to annihilate every record we saw in Q3. And then Q1 2022, same thing, and on and on and on for quarters and years to come. Don't say I didn't warn you. Let me know what you guys thought of Tesla's Q3 earnings in the comments below, and I'll see you in the next video. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.